Imagine waking up tomorrow and discovering that the entire global economy, stock markets, interest rates, national currencies, even the price of bread, all follow a 2,400-year-old playbook written by a handful of ancient bankers. Not politicians, not economists, but a small circle of men from an empire long buried under dust. And here's the real mystery. Their blueprint never disappeared. It simply upgraded itself century after century, wearing new names, new institutions, and new digital disguises. Today, you know it as central banking, interest cycles, inflation management, bailouts, liquidity injections, and market stabilization. But what if I told you the roots of every modern financial crisis were planted by a civilization older than Rome, older than the British Empire, older than the stock market itself? Tonight, we follow the trail. From ancient temples disguised as banks to medieval merchant dynasties, to the founding of the Bank of England, to the Federal Reserve, and finally, to the algorithms that now control your money without your permission. This is the ancient banking blueprint still manipulating today's economies, and you rewatching Finance TED Official. Let's begin. Before cryptocurrencies, before credit cards, before Wall Street rose from the Manhattan mud, humanity already had a financial system so clever, so engineered, and so ahead of its time that historians still argue over how it worked. But one thing is agreed: it controlled empires, it controlled wars, it still controls us. The same tricks, the same cycles, same psychological levers, and the same predictable crash that always follows. Why? Because the blueprint works too well, and the people who understand it use it. But we're not jumping straight to the modern world. To understand how this invisible system still manipulates us, we must go back to where it all started. The first bankers of Babylon. Our story begins around 575 BCE in Babylon, the superpower of the ancient world. While temples served religious functions, many also served as the earliest large-scale banking institutions. These temples weren't just spiritual centers, they were vaults, loan offices, ledgers, interest generators. What made Babylon's banking system revolutionary? 1. Deposits. Before banks, people stored grain, silver, and goods in temple vaults. In return, they received clay tablet receipts, the earliest prototypes of bank statements. Receipts could be transferred, traded, and used like money. A receipt economy? Sound familiar? It's the birth of interest. Babylon charged interest, sometimes 33% annually. This means wealth flowed from borrowers' gives to temple elites, gives to empire administrators, a controlled funnel. 3. Debt as a weapon. Most citizens lived under perpetual debt cycles. Farmers borrowed grain for planting. Traders borrowed silver for voyages. If the harvest failed or the voyage sank, the borrower became enslaved by the lender. Debt was not a tool, it was a leash. The blueprint is born. Babylon created 4 pillars that still exist today. Deposits, loans, interest, state-backed banking power. It was the first time in history that a government realized if you control money, you control everything. The rise, Rome's expansion, and financial engineers. Rome didn't invent banks, it weaponized them. Roman bankers, the Argentari, evolved the Babylonian blueprint by adding 1. Contract law. Rome's legal system allowed bankers to enforce debt with state power. A borrowed coin wasn't just a promise, it was a legal chain. 2. Fractional lending. Bankers discovered they could lend more money than they'd physically held. If they had 100 gold coins, they could lend 300. Because statistically, not all depositors would withdraw at once. This is the foundation of modern banking, and the reason bank runs still happen today. 3. Market bubbles. Rome experienced the world's first real estate bubble. Rich elites borrowed huge sums to buy land, expecting prices to rise forever. They didn't. And when the bubble popped, the empire spiraled into credit freezes, land seizures, mass bankruptcies, political uprisings. History repeats. Because the blueprint repeats, the breaking point. Medieval money masters. Fast forward to the Middle Ages. Europe collapsed after Rome, but the blueprint survived. Who kept it alive? It's the Knights Templar, warrior monks, holy soldiers, and the most powerful bankers of their age. How did they reinvent banking? 1. The first international wire transfer. A traveler could deposit gold in Paris, receive a coded note, and withdraw their gold in Jerusalem. Banks still use this model today. It's called correspondent banking. 2. Early credit system. Kings borrowed money to finance wars. Templars charged interest discreetly. If a king couldn't repay, Templars demanded land, castles, trade rights, political leverage. You see the pattern? Why the Templars were destroyed, King Philip IV of France owed them an impossible debt. So he accused them of treason, seized their assets, and executed the leadership. A classic move, when the borrower can't pay. They eliminate the lender, but the knowledge survived. The blueprint reborn. The Bank of England. Now we reach the turning point. The moment when the ancient blueprint becomes modern financial law. 1694, England is broke from war with France. Desperate, cornered. A group of wealthy private financiers offer a deal. Let us create a national bank. You borrow money from us. We issue banknotes backed by your debt. We become the financial heart of the kingdom. That bank became the Bank of England, the first modern central bank, and the world changed forever. What made it revolutionary? 1. Government debt became money the state borrowed from private bankers. Those IOUs circulated as banknotes. This single idea created global bond markets, state-backed paper currency, modern national debt, inflation cycles, interest rate manipulation. 2. Wars became bank-backed projects. Napoleon. Funded by France's banking system. British Empire expansion, funded by the Bank of England. America's Independence War, financed by European banks on both sides. Every gunpowder blast had interest attached. America's adoption. The Federal Reserve. In 1913, the United States created the Federal Reserve. It's modeled directly on Britain's system, which was modeled on the medieval system, which was modeled on the Roman system, which copied the Babylonian model. A perfect unbroken chain. What does the Federal Reserve control? The money supply, interest rates, inflation targets, liquidity flows, bailouts, bond markets, dollar stability. In other words, the Fed controls the heartbeat of the global economy. And yet, most people don't know the Fed is not fully government-owned. It's a hybrid structure with private bank influence. Just like 1694, just like the Templars, just like Rome, just like Babylon. Different costumes, same blueprint, the fallout. Modern crises that follow the blueprint. Now the story accelerates because we've reached the part where history repeats itself again. 1. The Great Depression, 1929, caused by easy credit, speculative bubbles, bank over-leveraging, everything Rome experienced, everything Babylon experienced. 2. The 2008 financial collapse caused by excessive lending, mortgage-backed securities. Systemic leverage, missing regulation, bank insolvency, government bailouts. Again, the blueprint. 3. 2022-2024 global inflation wave. Triggered by money printing, supply shocks, interest rate engineering, bond market dependency, Babylon would nod in recognition. Modern parallels, shocking data. Prepare for the most revealing part. 1. Global debt in 2025. $315 trillion, the highest in human history. That is 10 the world's GDP. Babylon collapsed at 100% debt to GDP. Rome collapsed at 150%. We are at 300%. 2. 60% of global money is digital IOUs, meaning most money does not exist. It is created through lending, exactly like Rome's fractional lending. 3. 70% of Americans cannot explain how the Fed works, yet it controls their savings, mortgages, job market, inflation, national debt. 4. 93% of U.S. currency supply was printed after 2008, which mirrors the exact inflation cycle that destroyed ancient empires. Failed fixes governments have tried: interest rate hikes, stimulus packages, quantitative easing, austerity measures, tax adjustments, currency interventions, but none of these solve the underlying issue. We are still using the Babylonian blueprint in a digital world, a paper model economy in an algorithmic age. The system was designed for control, not for stability, and every attempt to fix it only strengthens the pattern. Where we are heading, 3 technologies are rewriting the ancient rulebook. 1. Central bank digital currencies, CBDCs, modern upgrade to Babylonian temple receipts, but now programmable. 2. AI-driven monetary policy algorithms adjusting interest rates faster than human bankers ever could. 3. Tokenized assets, the rebirth of clay tablet receipts, but 4 digital commodities. The blueprint is evolving, not ending. The three clear takeaways: 1. Our financial system is not new, it is ancient. Every banking mechanism today is a descendant of methods invented thousands of years ago. 2. Debt is the core engine of global power. Empires rise when they can manage debt and collapse when they can't. 3. Understanding the blueprint helps you escape its traps. Most people react to financial events. Those who understand the pattern can predict them. Final warning, open-ended thought. We stand at a turning point. For the first time in history, technology is overtaking the system that once controlled everything. But the blueprint is stubborn. It doesn't die. It evolves, quietly, invisibly, shaping economies from the shadows. The real question is, will the next version free us or control us more tightly than ever? Only time will tell. If you want to keep uncovering the hidden structures behind global finance, ancient economic secrets, and modern market manipulation, subscribe now. You've been watching Finance Ted Official. Till next time, stay curious.